This is the stock market analysis that, well, I bring about 3 times a month now. We do these shows about 3 times a month, and we're live a couple times a month. So I always bring this particular slide because it's so important. It's very important for you to read this, and that says what our approach is to the market and about how you use the information that we share, and always the important aspect of trade ownership. You have to own your own trades. I actually have a video that I did on that that is in our video library, so you might want to watch that, level 2, 3, and 4. And this is the stock market analysis, multiple time frame analysis and projections on the S&P 500 and the NASDAQ, weekly and daily. Plus, I'm going to bring the MCM to you, and we'll take a look at that market condition monitor, which is a phenomenal application and really helps with the analysis. So let's take a look now as we switch over and look at the stock market. This is the S&P 500, SPX. What's on here is our 13 and 34 week moving average, which are key moving averages that I like to use on a weekly chart, and our reversal scout, which is right in here, which really gives you a sense for momentum conditions. It's always important to see when momentum turns up and when momentum turns down. Yes, my cycle analysis is not on here because this is the way a lot of people look at charts, but then don't really have the greatest handle on the energetics in the market, on important levels, on important timing, on seeing the action of the money flows as how money comes in and out of the market in a meaningful way. That's really what's important, is that there's meaning behind them. It flows in and out. And I'm going to just switch over here and show you my cycle analysis as it pops out at you. And you can see the kind of work that we do. I showed you the empty canvas, and then bringing in this art form of cycle analysis that gives us this great handle on the market conditions. There's something on this chart that I added for this particular illustration that I think is important, and I'm going to show you this on the daily chart also. Right over here, you can see the last 6 weekly cycles. And when I say that, I'm looking at the dominant cycle. So that's 1, 2, 3, 4. We're looking back at 4. There's a 5th one peeking out back over here. Had a false rally in conditions of negative momentum, and then a sharp drop to complete the trough. Now, you've seen the commentary that we've had in here from all of us showing you that the conditions in a lot of the stocks and indexes that we look at are that they are very near bottoming phases, or they're already in the bottoming phases. Bottoms are normally made because investors get frustrated. We go into some sort of a correction, the market pulls back, and then it has some kind of a bounce, and then all of a sudden the market starts moving down again, and then they realize, uh-oh, this decline's not over, and they start selling, and then you get to a lower low. And you get sometimes into a capitulation stage where the selling is very aggressive before you actually make that bottom. This notation that I put in here is speaking to that. And if you look right over here at this dominant cycle, what happened was it got down to the support. You had about a 2-week rally or 2.5-week rally where it came up pretty significantly, and then they just bailed out of them for a couple of weeks. And that's that kind of capitulation stage that makes the bottom. And you can see in here the minor cycle, the dominant cycle coming down at that time. And it made that 10.9% low last October, which was a bullseye for us timing wise. That's when we expected that low to come. And then the momentum turned back up. And then, well, we knew we were in the next rising phase. Look at this cycle right over here. It had about just over a week rally right over there, and then the capitulation stage. They sold them very hard right over there to end down 9.4% in that correction. So you can see this rally over here and this rally over here failed. This was a very negative cycle right over here where you had 2 negative configured cycles. These are positive. And you could see it tried to rally right over here. It had a pretty good upside spike for over a week, week and a half. And then it was 3 or 4 weeks of hard sell right over there, which is typical of a negative cycle that you see right over there. Look at this one over here. You could look at this rally, or you could look at this last one right over here, and then it sold down hard again and tested the low. I'm going to keep going back in here, and you can see that this one did the same thing in a positive cycle. It rallied up and then had that hard sell for a couple of weeks. That's how these bottoms are made, because investors give up. And that's what we're looking at right in here as I zoom in, for this rally right over here to be premature. Though we are in the bottoming phase, I thought that we would get, at least a 5.3% decline. I said that when the market was way up here, and we got about 6% in that decline right over there. And I said that it's possible that you get down 8%. And even last week, I said that's really the greatest likelihood that we get down there, with much less of a likelihood that you get down here. So these levels right over here that it made a low was around 49.51. This level right over here at the 8% decline on that monthly support is 48.37. And this decline over here, which would be about 11%, is 46.84. So those are the levels on the downside. Now, when I look at the daily chart, now remember, this momentum is coming down. So when momentum is coming down on the intermediate, there's a hard force of intermediate or longer term holders that are selling. This rally in here is against this momentum right here on the downside, just as this one was right over here, just as this one was right over here. And you can see that that's important to look at, because when I look at this daily chart right over here, you can see you had a continuous upside movement, the slim ribbon giving you support, slim ribbon PO giving you the upside resumptions of momentum that work so clearly. And now you could see that momentum turned negative over here. You're getting up into the top of the slim ribbon, up to the 50% retracement level of this decline right over here. And this is the sell zone right over here. Our compound, it's kind of a double channel cycle projection that we have in here, shows you, well, if it was weak, it would be in the lower part. If it was a little stronger, it would be in the upper part. And that has the upside projection up over here at the top of it of around 51.46. This level right over here is around 51.10, which is where we are right now. So the market could stop its advance right now, but there's a reason that I have that it might last longer, and that's in the VIX. And I'm just going to switch over to the VIX really quickly here on the daily chart, which RV very astutely said that there's a little shorter cycle right over here that we're looking at. And we're reviewing that 34-bar cycle, and that has about another week before that makes the bottom. And this one over here would be, if that was the dominant, would be about 2 weeks away. So what that says to me, looking at these VIX cycles, which are fantastic, is that the rally has a little more time to go. And then likely you're going to get above this 21 level, 22, 23, 24. We don't know. In a capitulation stage, it could get much higher, even well into the 30s. So we're looking at the potential for the stock market to continue up, because the VIX looks like it's going to continue down for another week or a little bit more. So let's go back to the S&P 500 here, and you could see that uptrend that we had and the upside momentum, the establishing of the negative cycle right in here, because this ended lower than it began, the rally up into the slim ribbon, into the resistance zone, and somewhere here between this area of 51.10 and 51.46 is where would I expect this to stop and then curl over. And then, as you can see, this is the declining phase out over here in that capitulation stage. It's not certain that it's going to do this. It's far from certain. But what it is the highest probability. And that this period right over here will be giving you, and I'm going to go look at the side-by-side here so that you can understand, that momentum is down here on the weekly. The declining phase is likely not done. So you have 1 cycle, 2 cycles still pushing down, momentum pushing down, 3 cycles and 4 cycles pushing down. This is 2 weeks of what could be a very hard sell-off in there. Maybe it plays up here, comes down and tests this low, and it's a 6% decline, and that's all of it. There's a potential that that's going to happen. The higher potential is that it's going to come up here and fail, and there's going to be a hard sell, just like there was in the last 6 cycles that I showed you on the weekly chart. This is that rally that has a high likelihood of failing, and then again moving to the downside. Everything is probabilistic. I don't say anything is certain. None of our teams say that at all. And we don't use extreme language like crash or melt up or any of those. We bring you whatever the probabilities are and show those to you so that you can use them to your best advantage and understand what is going on in the market. So now that I've brought you those charts, what I want you to see is our market condition monitor, because this is really important. So right now I have this market condition monitor set on short term. So this is available to level 3 and 4 members. And there's an upgrade coming soon that you're just absolutely going to love. So if you look here, you can see on the short term, you have three of them as neutral. Now, these were negative, but they have recently turned up here on the 23rd, and today you had the IWM go neutral on the short term. So these are neutral readings. They were very bearish, and now they're neutral. That's because the 2-hour reading on the slim ribbon has now turned green. And the weekly has been green all along, so that has, given you some sense that, it's pretty hard to have a big, huge downside move when you have these type of conditions right now, but they're likely going to change. And when I go to the intermediate right over here, you could see they're now slightly bearish in here. So you have this rally going on in the market, but they are now slightly bearish. If you want to understand the individuals reversal scout and slim ribbon applications studies that we put on here, right now I'm in the trader version, so you can go to the time frame version right there, and you can see in here that our entire focus list is in here, and you can see right now the reversal scout and the slim ribbon on the 2-hour is positive, and that's what I told you, that's what's making it looking more neutral. If I go to the daily chart right there, you can see that even though the market is rallying, these are still negative. And that's when you get the sense that there could likely be a failure in the market. Let's scroll down our entire focus list here, and you'll be able to see, looking here at the daily time frames for the reversal scout and slim ribbon, which are the most negative coming across, and you can see which ones those are right over here. And then when you start to get some neutral to more positive readings, it'll start to show as I scroll down. And here you can see the positive. Now, the only one that's positive on both so far is corn, as corn is now turning up. CBX is now positive, as you can see. DBA, which is, of course, the commodity markets, which are turning up. So you're getting those positive readings right over there. And I'll keep scrolling down for you to see. I'll try to do it a little bit slower so it's not all that choppy. Oops, keep going down right over here. And now we're going to start to get to some things that are a little more positive. EWU is more positive. Ford's decent. You can see that. That's on the daily chart right there. GDX is mixed, as you can see. On the gold market, and these are really, really valuable to look at. Again, we're looking at the daily conditions of our two primary momentum indicators, and this is so helpful to go down here and to see those. So I wanted you to see that. You can do a search if you want to, just like on Apple, and it'll bring up what the conditions are in Apple when you look at that, or NVIDIA, which everybody likes to look at. Whoops, I have an extra symbol there. And you can see NVIDIA right there. So you can look them up that way. Now that's on the daily. If I go to the weekly, you can see that right there. And there's NVIDIA on the weekly. And there are the indexes there on the weekly. And you can see on the weekly, the slim ribbon is still holding positive, the reversal scout holding negative on the indexes. And that's why we're in this mixed condition right now. If these were both red, I would say the probability of the next wave down being much harder than what I'm projecting right now, which is really just another couple percent on the downside from the low that we already made. So this is really important stuff. Let's go back to the trader version right over here. We'll just look at the condition setups right over here, and you could see, let's say the top 10 that are bullish are very bullish right over there. Of course, Newmont. CBX had great earnings, and that moved up. Goldman Sachs is still very bullish. That's amazing when we look at that. And let's just look here at the bottom 10, the ones that are very bearish. TAN, which is the solar stocks, IBB, Pfizer, XBI, Home Depot, TLT, Boeing is very bearish. And that's a look at the ones that are very bearish, looking at the short-term conditions. And of course, you can look at intermediate, near-term, any of those when you really want. Depends on the style of trader that you are. I like to start in at the short-term because I'm kind of a swing trader and prefer to look at that one first, but I'm always looking at the intermediate and the short-term at the same time. So there's your indexes right there. That is a look at our amazing market condition monitor, a level 3 and 4 application that is just so important to have as you do your work. There's that S&P 500 again. Again, we're looking for maybe just a little bit more rally in here, maybe for a week, maybe a little bit more than that, and then getting into this period of a potential sharp decline. That is my presentation on the stock market. I hope that you found it illuminating. I want to remind you that we're just in the final weekend of our cycle analysis workshop special. Get this $400 discount. And if you're a level 4 member, it's a $500 discount. So take advantage of that. If you have any questions, write to Matt at askSlim.com.